Over the last 20 years in the mortgage industry, I've noticed that there are some pretty common mistakes that people make when they go to get a mortgage. And more often than not, they don't even realize that they're making these mistakes until it is too late and it's cost them tens of thousands, if not hundreds of thousands of dollars. So in this video, I want to discuss the 5 biggest mistakes that people make when they get a mortgage in Canada and what you can do to prevent them. But before I get into it, my name is Nolan Matthias, and like I said, I've been selling mortgages for the last 20 years. And yes, I know what you're thinking. Wow, he must have started when he was 5, and that would be correct. But all kidding aside, my company Mortgage 360 has helped thousands of Canadians get mortgages and do it the right way. Because there's a right and a wrong way to do this. And I'm not saying our way is the right way, but what I am saying is that if you do it properly, you can prevent yourself from making major mistakes and finding yourself in a really bad situation. Oh, and one more thing before I go into the details of what those mistakes are. Every penny that I make in AdSense from this YouTube channel goes directly to charity. So if you have a favorite charity that you want to see us contribute to, tell me what they are in the comments section, because every single month we give away the money. We do it right here on the channel, and I would love to have your charity be picked for the next month. And one last thing, everybody who subscribes, every like I get, every comment I get helps raise more money. So do me a favor, hit the like button and hit the subscribe button as well. Okay, so let's get into it. Let's discuss the 5 major mistakes that people make when getting a mortgage in Canada. And this first one is probably going to surprise you. It is not being a Richard. What's a Richard? Well, Richard in the old days, the short form for Richard was Dick. And what I mean by this is don't be a dick. So in other words, don't go and shop around to a whole bunch of different mortgage brokers and a whole bunch of different banks and get a whole bunch of people to do mortgage applications, which can kind of hurt your credit, although not really. But don't make a whole bunch of people do a whole bunch of work and fight against each other, because this not only wastes a whole bunch of people's time, but it also does one really important thing that will hurt you. And that is, it will cause confusion. The more people you get involved in the process, the more salespeople you get involved in the process, the more they will try to convince you that whatever the other guy is telling you to do is wrong, whether that is actually right or wrong. So the better way to go about getting a mortgage is to find somebody that you trust to do the shopping for you. And the way that you do that is by choosing a good mortgage broker. And if you don't have a good mortgage broker, or you want a great mortgage broker, my team at Mortgage 360 can help you. I have one of the best mortgage teams in the country, made up entirely of females who put doing the right thing first and put the client's needs ahead of their own every single time. In fact, we pay them on a salary so that they don't have to worry about putting their needs first, because they know that regardless of what happens, they're going to get paid exactly the same, unless, of course, they get really good reviews, in which case we give them a little bonus. And in order for them to get good reviews, that means that they're going to have to obviously do what is in the best interest of you. So if you want their help, go to mortgage360.ca, check us out, and give us that opportunity to help you make the right decision and do the shopping for you in one place you can trust. Now, the second big mistake is that people don't know what questions to ask. And this is hugely important, knowing the questions to ask, not just what is the lowest rate, but the things like, who do you work for? Is it for me or is it for the bank? And what do I get if I get the lowest rate? And what am I giving up if I get the lowest rate? And really, should I have a fixed or should I have a variable? And how do I decide? Those questions are quite often the difference between getting a mortgage that is the right mortgage for you and one that ends up costing you a significant amount of money somewhere down the road. And you need not look any further than the comment section of some of my older videos, where people express their frustration in the fact that they watched one of my 13-minute videos talking about variable versus fixed rates in the past, chose a variable rate, but didn't understand what they were getting, didn't know which questions to ask, and therefore chose, for example, a variable rate with a fixed payment, which is now negative amortizing and is costing them a significant amount of money. And knowing the right questions to ask is more than just Googling what questions should I ask when getting a mortgage, which you can find some great documentation on that, by the way. You can also find some videos on this channel if you want to find out more about that. But it's also asking the mortgage brokers and the banks that you're dealing with, what are the right questions to ask? And if they give you upfront and honest information, you'll know pretty much immediately. Now, the third mistake that we see people make when they're trying to get a mortgage in Canada is trying to do it alone. This means going in and negotiating with a bank, going in and negotiating with a whole bunch of different discount mortgage brokers and trying to get the best rate. But because they're trying to get the best rate and they're so focused on the price, they skip out on the things that are really important, like the prepayment privileges, the payout penalty calculations, and whether or not they can actually switch to a different lender if interest rates get lower and they want to save some money. And none of this makes sense to me, especially given the fact that in Canada, most provinces regulate mortgage brokers to operate from what's called a fiduciary duty, which means that legally a mortgage broker has to do what is in your best interest. So if you can hire somebody who is legally obligated to do what's in your best interest, and quite often they have to do it for free because they get paid by the lender and will get you an overall better deal than what your bank will offer you, well, it's kind of a no-brainer, isn't it? Like in this day and age, should you really be going into the bank unrepresented and having somebody who is considerably more sophisticated than you try to tell you what you do and don't need? And by the way, those bankers don't have an obligation to you. In fact, it's the opposite. They have an obligation to the shareholders, which means that they have to do what is best for the bank, which is try to make as much money off of you as possible. So there's no reason to try to do this alone. Hire a great mortgage broker, someone you can trust, and let them do the shopping for you. And listen to them when they tell you that maybe that discount rate that is 0.1% cheaper isn't the best mortgage for you, especially when you consider that that 0.1% is probably the price of a cup of coffee or maybe a glass of wine every single week, but could end up costing you tens of thousands of dollars by way of an interest rate differential or choosing the wrong mortgage. And I'll talk about choosing the wrong mortgage in a second, but first let's talk about choosing the wrong lender, because this is by far the biggest mistake we see people make. Choosing a B lender, in other words, a bank, B is for bank, who has higher interest rate differentials or crappy products like variable rate mortgages with fixed payments, is definitely going to hurt you in the long run. And it's no secret that there are other lenders out there like the First Nationals, the MCAPs, the CMLSs of the world that don't have brand names, they can't skate on their reputations or their marketing budgets, so they actually have to have better products. And when you choose these better lenders, the better products that they provide are potentially going to save you tens of thousands, if not hundreds of thousands of dollars. Oh, and these lenders also allow you to be represented by brokers so that you can get the best mortgage for you. These lenders make their living off of making sure that the clients that are brought to them are the exact right clients. In fact, they deal almost exclusively in the A++ clients, the clients that the banks would love to have, which is why these lenders are typically funded by the big banks, by the way, using money that is on deposit with Canada's most trusted institutions to provide better mortgages for Canadians. So make sure you choose the right lender when you go to get your mortgage. It can be the difference between you having a massive interest rate differential, or more importantly, if interest rates go down, the ability to get a lower rate elsewhere. And that leads us to the last mistake people make, and that is choosing the wrong mortgage. Choosing a variable rate mortgage with a fixed payment, not knowing that that mortgage could negative amortize if something crazy happens, like interest rates go up by 5% in the next 5 years. Or choosing a variable rate mortgage with a lender that has high lock-in rates, and when you go to actually lock in, you're going to have to pay substantially more because, well, that's the rate that they can offer you. Or even worse, choosing a lender that has what's called a bona fide sale clause, which is essentially a clause that makes it so that you cannot leave until the renewal date, which means if interest rates go down midterm, you're pretty much stuck with whatever rate you're paying because you can't leave. And when you lose the ability to leave and vote with your feet, well, you lose all of your bargaining power, and subsequently, you are at the mercy of that lender. And like I said before, the secret to choosing the right mortgage is to have somebody who has your back. Again, my staff at Mortgage 360 will absolutely have your back throughout the process. Oh, and if you want to know more about all these different types of mortgages and the actual process of getting a mortgage in Canada, make sure you check out my free book, Mortgage Secrets, which you can get by going to mortgagesecrets.ca. All you have to do is pay the shipping and handling. Oh, and if you want more information on choosing the right mortgage or buying a home in Canada, make sure you check out one of these videos right here.